Good morning and welcome. It is 6 a.m. It's half an hour before the market's going to open. And it's been a little while since we've done this, right? I've been away. I'm back and I'm ready to go, ready to see how the markets are moving. So let's take a look. We've got our futures, and futures are down significantly. We've got our S&P down about 0.65%, and it's like Dow about 0.5%, and NASDAQ down about 0.92%. That's pretty significant. And I think yesterday our pattern was that it came down and it moved up. Let's see how we're doing today. Let's go over to our day trading. Oops, that's the wrong one. All right, let's take a look at how our markets are developing this morning. Okay, and down, you can see that we ended up here yesterday, basically flat from where we opened. We came down, we gapped down, traded up a little, and now in the last 10, 20 minutes or so, we really started to break down again. So there's definitely a downward bias in this market that gives us opportunity early in the morning if you're a day trader, a potential opportunity to catch a wave up, maybe as high as the VWAP, maybe even higher if the market really recovers and is strong. And then mostly downward bias today. So let's see what forces are operating in the markets. We've got, today is Wednesday. Yep. So we've got retail sales. That'll be pretty important. That came out already. That came out at about half an hour ago. So let's see what the effect was on that. And a little bit of reaction. It could be what started to bring futures down even more. What else do we have? The rest is industrial production. That'll come in about 15 minutes. And then the rest isn't that significant. So I wouldn't put too much emphasis on the rest of this. What we do want to see, though, is what happened in bonds. So let's take a look in TLT. And we got that breakdown yesterday. You see we were chopping sideways just under the MA200 and the EMA20, and finally the EMA8. And yesterday we broke down, we gapped down and traded lower. That's the same thing that happened in the major indices, but the difference is TLT stayed down near this MA150, and it looks like this MA50 is converging right here. So this is going to be important. Previously, we were talking about this as well. We were saying how we may move down towards the MA150. By the time we got there, that MA50 may be at that same level. It looks like we're pretty much at that point. So now we are at another critical point for TLT. If we break below these two levels, then there's really not that much support. There's the MA90 and that's it. So there's a lot of potential for this TLT to continue moving down. And if that happens, that's going to put a lot of pressure on those tech stocks, QQQ, and also those small cap stocks, because they're all competing for yield. So I need to take a look. I need to refresh myself on what happened over the past week. But the QQQ and the major indices, they had been trading sideways, right? When we were saying, okay, we're near all-time highs, we're unable to break above it so far. There's a potential for it to move up, but if it did move up, we identified that it would be limited, and we would still be expecting that pullback. Well, so far, I'm pretty sure we didn't break those highs. And now we have the TLT breaking down, putting pressure on the growth and the small cap stocks. And now it's looking like we have high potential for that pullback to start happening. And it really does need to happen for the markets to operate in a healthy way and for us to be able to start making new highs and breaking beyond past all-time highs. So let's take a look at that. TLT gap down. We're at a critical level. Let's take a look at our major indices. We'll start with QQQ. And yeah, we didn't really move anywhere. It's been a just sideways movement. We are above that EMA8, so I wouldn't be surprised if today we break below. Well, when we open, we're already going to be below that EMA8. I won't be surprised if we stay below there, or even if we crack a little bit below that EMA 20 today. Let's take a look at the Dow Jones. Dow Jones pulled back to the EMA 20 yesterday. We're going to open below the EMA 20. So it's looking like we're finally seeing weakness in the Dow Jones that had been leading for the last few weeks, but really just chopping sideways. You can see that. And today we're going to open near the bottom of that sideways chop. So if we continue to break down, then we're probably heading to this C green line over here, and maybe even lower, down all the way down to at least the MA 50. And that'll be healthy. We'll look in just a moment at all the momentum levels that are in the markets. But generally, if we have so many stocks above their MA 50, it does need to pull down for us to be able to continue moving higher. So let's take a look at the S&P 500. S&P 500, similar to the Dow Jones, but it really in between the Dow, is similar to the QQQ, but really in between the Dow Jones and the QQQ, which is no surprise. So we ended right at the EMA 8 or opening right at the EMA 20, and same thing as the QQQ. I won't be surprised if we pull back down below this EMA 20, perhaps matching these lows right here in the next few days. And then if that TLT cracks, we're heading at least to that MA 50 right there. Let's take a quick look at our small cap stocks. And small cap stocks are already breaking below this horizontal line. We had this gap up, and then we moved higher, and we pulled in a lot of speculative buyers. So we've been talking about small caps for a really long time, and we drew these pink lines a couple of years ago. So we've been anticipating the break above this pink line, and we're not the only ones. There's a lot of people in the markets who are looking at the same thing and starting to focus on small cap stocks, but this was a false breakout, and the previous level didn't even hold, and we came back, we filled this gap, started moving sideways, and then yesterday we broke below even this pink line right here. So it's going to be important to watch the small caps. If the TLT continues to move down, then we're headed at least to this MA 50, and then at least for the small cap stocks, that might be enough. We may come all the way down to this MA 200, and then if things are really bad, then we'll come down to maybe this horizontal line right here, and then we'll see. But when we bounce and when we recover, our focus will be on small cap stocks because they will start to lead if we are going to go into a true bull market. So the focus on the small cap stocks is warranted, but this was too early. This trapped some people. Some people lost some money over here. Okay. Let's take a look at the momentum levels. That's what we were talking about earlier. So let's go over here and take a look at our market performance. And what we're really focused on right now is this MA50 number right here. It's usually in comparison to the MA200, but right now I'm just going to look purely at that MA50. And when I look at that, let's get rid of this. How do I get rid of this? All right, ignore the pink stuff and the red stuff. I'm not sure why it's on there. I'll have to figure out. I don't use charting on bar chart that often, so I'm not super familiar with their controls. I'll figure it out a little bit later. So if I go over here, let's go to 20. If I go 20 year, you can see that we hit this peak right here that just doesn't get hit very often. Ignoring this pink stuff, just the blue stuff. If I put my mouse right here, you'll see that gray horizontal line right at 449.16, about 4 on the left, or 88.85 on the right. And you can see that we've hit this line. We've touched it in near 2009 to 2010, and then again in 2012, and then again in 2016, and then we came close in 2019, and then in 2020 and 2023. So that's only like 6 times. And the 7th was most recently in 2023. And we're starting to pull back from that level. That height does not get reached very often. And now we're down at 77.93, if I put my mouse right here, it doesn't hit this level very often. Every time we hit these levels, we pull back. We pull back pretty far, at least to 50, but most oftentimes around this 30 to 20 region. So that's really what we're looking at for this to happen. And how quickly does it happen? Is 1, 2, 3, within 3 months on every peak that we see. Sometimes we bounce back a little, but within 3 months, we're down here at this, at least to the 50 level. And that's going to be our expectation right here. When that happens, when you have half the stocks in the S&P 500 or lower at their MA50, that means that at best, unless we are overweight on the huge influencers like the Magnificent Seven, we will be at the very least at the MA50 in the S&P 500. So there is good potential over the next 2 to 3 months for us to pull back to the MA50. Now that may or may not be really scary because right now that's a little bit of distance, but it's not too far. It's not too bad. It's the same as this horizontal support that we have right here, which matches this peak right here. But at the same time, if we keep hanging out over here, this MA50 is going to creep higher as well. So over the next 2 to 3 months, it'll be a pullback, but it may not be a huge pullback. But it could be all we need. We just need to relieve that pressure from all this momentum that we have, or pent up momentum that we have. So we just need that pullback to that MA50. And it really does look like that we're going to get that in the next couple of months. So QQQ, we're going to keep a careful eye on that and the TLT. If we break down below these levels, that MA150 and that MA50, then we're going to start hedging and we're going to start buying puts on the QQQ because then we have that potential to move downwards. Another way to do it would be options on the VIX. And then the VXN, I don't think they sell options on the VXN, which would be directly correlated to the volatility of the QQQ. So we can buy VIX because that QQQ will drag down the S&P 500, and we'll probably get pretty close to that MA50, if not all the way to the MA50 as well. Now, just there's heightened risk in the market right now. We could just keep on chopping, but there's a heightened risk right now of us starting that pullback that we've been anticipating for quite some time, right? Since mid-November or early December. So we're just going to be very careful as we proceed with our portfolios, make sure that we're constantly balanced. If we have a long, we have a short. If we buy something, we sell something, and everything is just hedged or well balanced. So this morning, if you're a day trader, I would wait for that first half hour. That's pretty standard procedure for us, but we could start moving up towards that VWAP and then just be careful and watch for a breakout above the VWAP or a breakdown, and then matching the lows of the pre-market right here. All right, that's it for today. We'll see how the day develops, and then we will catch up with each other in the aftermarket.